Good afternoon and welcome to the next presentation. We're joined today by Sondre Gravir, who is the CEO of SATS. And having said that, I leave the word over to you, Sondre.
Thank you very much, and welcome everyone, and thank you for listening in on this presentation of SATS on this Pensa Sports Health and Team Day. I will present and give you a little bit background of SATS and our position in the Nordic market, and then I will also spend some time on giving you a status update as we had our fourth quarter presentation to the market this Tuesday. I will spend around 30 minutes on my presentation, and then I really hope that you all have some questions after the presentation, so we're ready for the Q&A session. Next slide, please. Next. So first, if we look at SATS as an overview and as an introduction, so to say, to the investment case, SATS, we are the leading Nordic fitness operator. We are present in the four Nordic countries, Norway, Sweden, Finland, and Denmark. We have a strong number one position in our market in Norway and Sweden. We are also the number one. We also have a number one position in the Finnish market, even though somewhat weaker number one position, as the Finnish market is more fragmented. And as you can also see, our club footprint in the Finnish market is somewhat lower than in Sweden and Norway. And then in Denmark, we are concentrated on Sjælland, or the greater Copenhagen region, and we are the number two player in the market in Denmark after Fitness World. We have 253 clubs. We have just below 630,000 members. And as I said, we're the number one player in the Nordic market, and we're the number three player in Europe. Next slide, please. Our vision in SATS is to make people healthier and happier. This is what we do every day in our clubs, and this is what we do on our digital platform. In a normal year, we have around 38 to 40 million visits in our club. And this is, of course, a very important contribution to public health. And we have done different type of calculations or estimates from external agencies to calculate, so to say, the social value and the value for the society of all these training sessions. Because these are training sessions that wouldn't have been there if it hadn't been for SATS. And there are different ways of measuring this, but the main message is that we have a significant positive contribution to the public health in all the countries we operate in. And it's estimated to have a social welfare gain of at least 11 billion NOK due to the fact that people are getting healthier and hence also prolong their expected lifetime. Next slide, please. Then if you look at our position, we have a leading position, not only because we are the leader in terms of number of clubs and members. The main reason driving our leading position, especially in the strong clusters in the capital cities, is due to the unique value proposition we give to our members. This is based on a combination of the fact that we have the broadest and most extensive product offering. We have a very flexible membership model, meaning it's a modular membership model. Basically, you pay for what you use. You're not locked into long binding contracts on paying, so to say, for a lot of access that you don't want to use. This combined with also a very strong and leading digital user experience is a very strong value proposition. And this is driven by the cluster strategy that we have. So in SATS, we are not a single city, single club operator. That will not be our strategy either going forward, because our strategy is to have a very strong cluster with many clubs in the same city, so we always have a club close by. And this is due to the way we want to give our members a unique product offering, as we can see on the next slide. To explain you a little bit about how we think of our product offering and programming. So a key part of our offering is our group concepts and group classes. And we have a wide range of classes, more than 150 different type of training concepts in our clubs. And in a typical week, we have more than 2,800 classes on the schedule in, for example, Oslo or Stockholm. And we also have a wide range of experienced personal trainers, meaning that we are not only going broad in terms of different training concepts, but we also go very deep in the different niches. So we are the biggest, we are the number one offering in terms of yoga, in terms of strength, in terms of cardio, etc., in our clusters. And then we cannot offer all our products in all our clubs. So the way we plan this based on both visitor data in our clubs, because a typical member is visiting several clubs during a week. So the typical SATS member is not only working out at one club. 3/4 of our members, for example, in Stockholm, work out at 3 to 4 different clubs, training different concepts in the different clubs. So based on the user patterns, we plan and program the distribution of our products so all our members get access to all our products without us having all the products in each club, because that would not be efficient from a cost point of view. And then lastly, an important point to make is that we develop most of our concepts in-house, meaning that we're not strongly dependent on global, so to say, licensed concepts. And this is important, both, of course, from a cost point of view, but also from a flexibility point of view, because we want to be very close to the market trends and roll out new product offering when we see that the consumer trends in the market is changing. So, for example, a few years ago, yoga was not that strong or that big in the Nordics. And now yoga is, of course, one of the most important verticals we have in our product offering. And in a very short time, we have become the leading yoga player in our markets because we have rolled out and educated quickly our yoga concept and our yoga instructors. So this is a way of being close to the market trends and flexible in our product offering. And then with the extensive club network of so many clubs per cluster, we have a undisputable and uncomparable value proposition to our members. Next slide, please. Then if you look at our financial track record, I think it's also proven that we have a strong financial track record. And then, of course, as I will go back to, 2020 turned out different than planned due to the pandemic. This is also illustrated in the Q4 presentation we had on Tuesday. But leading up to the pandemic, I think the financial numbers are speaking for themselves. We have improved and grown our member base. This is mostly within the same range of clubs. So we have not expanded our club network significantly over the last years. This is something we are ramping up now, as I will get back to. But we are growing the member base, and we are growing revenues, and also growing the underlying profitability due to the scale benefits in operations and due to the, so to say, scale economics in our business, where we have a pretty high drop through on new revenues down to EBITDA, as we're not adding a lot of new cost if we're adding, for example, 5,000 new members in the network. And this is, of course, hitting us the opposite way in 2020 with the pandemic, where we see that revenues are coming down, where we're not, where it's also hitting, so to say, EBITDA proportionally quite high. But if you look at the underlying development in the portfolio, it's been very strong over the last couple of years, as illustrated here. Next slide, please. Then if we dive a little bit more into the current situation and Q4 financials and how we think about the development going forward. Next slide, please. If you look at 2020, we started the year with very positive and strong growth in January and February. And then came March, and we closed all our clubs in the Nordics on our own initiative, March 12, 2020. And we did this to take social responsibility to limit the spread of COVID-19, also because we did not have good enough facts around how the virus spread in our fitness clubs, And we also wanted to make sure that we had strong enough operational routines to make it safe for our members and staff to have our clubs open. Hence, we decided to close all our clubs, and then we reopened the clubs gradually throughout the spring. We were only closed for 2 weeks in Sweden, 6 weeks in Finland, and then by 15th of June, we had all clubs open and operating. And then we have had a second wave of lockdowns of clubs now during the fall, closing all our clubs in Denmark and the majority of our clubs in Norway. And then we've been operating our clubs in Sweden and Finland with quite strong restrictions. Next slide, please. When it comes to the situation today, we are in a position where we have opened, as I said, clubs in Finland and Sweden with restrictions, and then still clubs in Denmark being closed and majority of clubs in Norway being closed, with all the clubs in Oslo being closed. And this has severe negative effect of public health. And if you remember from the beginning, I said that in a normal year, we have close to 40 million visits on our clubs annually. And yes, some of the most enthusiastic people in the population, they manage to work out during them. But it's quite a small share of the population that manage to push themselves either to do extensive home training or outdoor training. So most of these 40 million training sessions that we normally have in our clubs have not been replaced by other forms of training. And there are several surveys showing that the majority of the population are much less active now than what they used to be before the pandemic. And this will have significant negative effects on public health going forward. Next slide, please. And we have proven that we are able to operate our clubs in a safe way. We have introduced many new operational routines throughout the pandemic. We have, of course, full access control to our clubs with detailed digital registration and upfront booking, and members use our app to access the clubs. Hence, we have full and complete overview of who has been in the club at what point in time and what they have been doing. This is as a contrary to many, for example, other commercial businesses who don't have the same type of visitor tracking. And this has proven to be very important in terms of infection tracking in supporting the government in the work they do on infection tracking. And then, of course, we have significantly improved our hygienic protocols and our cleaning routines and taken several steps to ensure that it's clean and safe in our clubs. And we also reduced capacity to ensure social distancing. So, for example, when the new pandemic law was implemented in Sweden just now in January, we did not have to change our operational routines in our Swedish clubs because we had already taken all the steps that was included in the pandemic law. We also had a close dialogue with Folkhälsomyndigheten over Christmas to ensure and give our input to the restrictions in the pandemic law when it came to our industry. And we have had several controls in our clubs, for example, in Stockholm over the past few weeks, with all the clubs being approved and with positive feedback on how we are operating the clubs. And Norway has been somewhat different than the other Nordic countries when it comes to infection tracking. So basically in Norway, we had complete infection tracking until the end of October last year. And then infection tracking started to lose control and the government was not able to track, so to say, all infected cases back to the starting point. But until October, they were. And during that period, we had more than 5 million visits in our Norwegian clubs. Due to full infection tracking in the society, we knew by a fact that we had 237 members who tested positive of COVID-19 in the few days following the visit in the SATS club. But there have been no confirmed transmission in the clubs based on the infection tracking, meaning that none of these members were infected in the club nor infected others. So I think it's we are on safe ground when we say that it's safe to visit SATS clubs and it's safe to keep the fitness clubs open also during the pandemic, and the facts are clear. Next slide, please. And then what will happen when we reopen the clubs? And we saw this clearly in the spring after reopening the clubs in the first lockdown. And then we have also seen it now when we are reopening the clubs in some cities after the second lockdown. We see that visits are coming back in a very quick way. We see a rapid recovery. We see members longing to get back to the clubs. And for example, in Bergen, when we opened the clubs, it just took like 2 weeks now in January before visits were actually back to the same level as before the pandemic, even with all the COVID-19 measures in place in the clubs, meaning that visits are distributed much more equally throughout the day due to the reduced max capacity in the clubs. And then if you look at the visit levels now in the different countries, in Finland, visits are on approximately 15% lower than last year level, which is good given the restrictions we operate with. In Sweden, still the recommendation from the government is to avoid public spaces and stay home. So there we have taken very strong measures to reduce the visits, but now we see that we are starting to, so to say, lifting, a little bit on the capacity. So visits are coming up now, currently around 25% lower than last year. While, as I said, in the open clubs in Norway, we see very strong visit numbers. Hence, when we reopen the currently closed clubs, we expect a very rapid recovery of visits. Next slide, please. We also expect a rapid recovery of members. And this we saw, as indicated in this graph, also in the third quarter when we reopened the clubs. So we entered into the year, as you can see here, with a strong growth in the member base. And then member base has been declining during the pandemic with closed clubs. This is not due to the fact that we have had a strong increase in churn. So it's not driven by increased fall-off, meaning that members are canceling their membership. Fall-off has actually been on quite the same level as normal during the pandemic. But there's an underlying fall-off in the portfolio in the subscription model anyhow. And the challenge has been that new sales has, of course, been low when we have had closed clubs. And this is what is driving the member base down. And then in Q3, when we reopen the clubs, we saw a very strong comeback. Q3 is normally a quarter due to seasonality where we're not growing the member base significantly. So in Q3 2019, we had a net growth in the member base of 1,000 members, while in Q3 2020, we had a net growth in the member base of 26,000 members. So when we open the clubs again and we start to, so to say, reduce the restrictions we're operating with as the societies are gradually reopening and coming back in the Nordics, we are very confident that we will see a rapid member recovery. Next slide, please. Then looking ahead, because there's a lot of things changing in the market, of course, due to the pandemic. And what we see is both an increased market growth as well as a repositioning of SATS. And I will comment on that. Next slide, please. Starting first with the market. So, of course, the pandemic are, in a way, accelerating consumer trends that were already present before the pandemic. And two trends relevant for SATS is, of course, the underlying mega trend that has been accelerated with an increased focus on health and lifestyle. And we see that people all over Europe or globally, but also in the Nordics, are willing to invest more both time and money to stay active. We see this in the increase of trading in the sport industry, for example, and we also see this in the increased demand for our product when we reopen the clubs. And then the other trend is, of course, digitalization that has been accelerated in the whole society as a result of the pandemic. And this we also see with a very strong growth in our digital product. So overall, we believe that sort of the health and wellness ecosystem will grow significantly going forward and have a higher market growth than we've seen historically. And fitness clubs are in the center of this ecosystem. Hence, we expect increased market growth going forward. Next slide, please. And then we believe, not being fully objective, of course, but we believe that we have spent the time well during the pandemic, and we have taken several actions to, in a way, both deal with the crisis in the best possible way short term, but also to position ourselves strong for the growth we expect to come. So we have improved our member activation platform. We have improved significantly our operational routines. We have increased our cost control and also taken steps to further growth both our physical and digital presence. And then if I comment on each of these three, next slide, please. Firstly, on member activation. So it's a myth on the industry, on the fitness industry, that passive members are a good thing for the financials, as you get revenue and you don't get a lot of cost because they're not visiting the clubs. This is clearly a myth. We are a subscription-based business model, and in all subscription-based business models, being either physical models or digital models, engagement and usage are key KPIs to follow. Hence, we are very much focused to make sure that we have as high activity level as possible in the member base, both in terms of physical visits to our clubs, but also digital usage. And if you look at people canceling their membership, so around 75 to 80% of our turners are so-called passive members, meaning that they've not used their membership. So our active members, they have very high NPS scores, they have high user satisfaction, and they are continuing their memberships. So for us to work with what we call member activation has both a strategically, a financial, and also a very strong link to our vision of making people healthier and happier. And we've been doing a lot of pilots during 2020 to understand how we can further increase the activity level and activate our members, and seen some strong results, which we will roll out in full scale when we are back to, so to say, normal operations. And here, of course, our app, which has a significant penetration and usage now in the member base, is an important contributor, where we can both nudge and trigger our existing members to become more active, but also to make sure that we onboard our new members in a good way, so they become active and not passive members. Next slide, please. Then secondly, as I said, we have further standardized our operating model, meaning that we now have a very similar way, so to say, of operating our clubs across geographies and across countries. And this is important both from a member quality and operational quality point of view, but it's also important, of course, from a cost point of view. And of course, all the COVID-19 related measures in our clubs are driving increased cost. And hence, it's been important for us to cut cost on other areas to make sure that we are still able to operating our clubs with a flattish, so to say, cost development, even though we've increased the cost on several areas linked to the pandemic. And this we have proven now both in Q3, especially where we had all the clubs open, that we saw that operational cost is not coming up as a result of the pandemic, because we have compensated the cost increases with cost cuts, which is important for us. Next slide, please. And then, as I said in the beginning, we have had an increasing member base over the last couple of years in SATS, and this has mainly been driven on a like-for-like basis in the network, because we have not added very many clubs to the network. Now we are, so to say, accelerating the increase of clubs in and the expansion of our physical footprint, as we see very interesting growth opportunities in the market, partly in the market as a starting point, but also partly driven by the pandemic, as market is consolidating and changing, both in our industry, but also in the retail industry in general. So we see that we get access now to very interesting locations. Hence, we have stepped up our new openings, both in 2020 and 2021. And we are adding now between 25 and 30 clubs already communicated to the network in 2020 and 2021. And we have also new and more establishment that will communicate it going forward for 2021. So we are adding significantly new numbers of clubs to the network, and these are clubs at very attractive locations, which will have a very positive contribution to EBITDA and member growth when we get back to normal operation. Next slide. Next slide. And this is an illustration of where our current clubs are placed in the cluster and where we are adding clubs. And as you can see, most of the additions we're doing to the club cluster now is actually in the clusters where we already have the strongest presence. And with the significant presence we have in Oslo and Stockholm, people are asking, do you still see opportunities for growing your presence in these two capital cities where you already have maybe the highest density of clubs compared to population in any European cities? And the clear answer to that is yes. We see significant growth opportunities, and we will add more clubs also in these capital cities going forward, because this is both adding value by recruiting new members to SATS, but remember, it's also adding value to the current members as they get more clubs to work out in, and hence our, so to say, competitive situation is further strengthened. So this will be the strategy going forward as well. We will expand our current clusters and then potentially enter into some new clusters. But the main focus will be around expanding the current clusters. Next slide. And then, even though many areas have been challenging throughout 2020 and during the pandemic, one area has been clearly a winner, and that is, of course, a lot of different digital services, including our own digital offering. We have extended the product offering significantly during 2020. We started the recruiting of a strong internal technology team, good ahead of the pandemic, luckily, and we have expanded this team significantly now during 2020. And we have added both new one-to-one products. We have added a significant new amount of classes and training programs, etc., to our digital product offering. And we've seen a very strong growth in the usage. Next slide, please. So looking at 2020 and last quarter, we have now around 500,000 app users on our app. And we have, in a normal quarter, around 3 million unique web users performing 3 to 4 million workout sessions on our digital platform. So these are very, very strong numbers. And what we also saw when we opened and operated all our clubs open again in the fall was that, of course, the growth was somewhat decreased when we opened all the clubs, but it remained on a significantly higher level than before the pandemic. So we believe, so to say, that the omnichannel approach of both having a strong digital offering and a strong physical presence will be an important competitive advantage for us going forward. Next slide, please. And still, as I said, the market is growing, but still there's a lot of untapped potential in the market. Around 80% of the population is not a member of a fitness club, while at the same time we know that the vast majority, also around 80% of the population, wants to work out more. So next slide, please. We want to expand our digital offering because we also see a strong potential in the digitalization, so to say, of the fitness market, and also that we are able to grow our presence outside our physical presence. And with the strong membership base and brand we have, and also with the strong starting position on digital, we will further invest in our digital product offering and expand this offering to make sure that we continue the significant and strong growth we've seen in 2020. And we will come back to more, so to say, updates to the market throughout 2021 on the new product extensions we're doing on this area. Next slide. Then looking at the end now, briefly into the financials, and I will do this fairly quickly. Next slide. Revenues has, of course, been severely hit by closed club and frozen membership. So basically, when we close the clubs, we put all members on freeze, meaning that they're not paying And the same way, when we open the clubs, we activate all memberships again, meaning that revenues are coming back, so to say, 100% immediately. We've seen that the underlying ARPM in our member base is still on a positive development. Of course, the reported ARPM is somewhat down due to closed clubs, etc. But the underlying ARPM is going in the right direction. But for Q4 isolated, as you can see, revenue came down due to closed clubs. Next slide, please. And then this translated also into a negative operating result, or EBITDA. This is EBITDA before impact of IFRS 16. And the result in the fourth quarter was a minus 32 million NOK. Next slide. Then looking ahead, we are in a position where we have sufficient liquidity. We are very comfortable with the situation, both to handle, so to say, the unsecure time to come. We expect and believe all our clubs to open pretty soon in Norway, and then somewhat later opening in Denmark. But of course, these are uncertain times, and we expect to have, local shorter time close down going ahead, especially in Norway, as that is the strategy now from the Norwegian government. And we have sufficient liquidity both to handle this uncertainty, but also, maybe more importantly, of course, to be able to pursue the interesting growth opportunities and to invest in future growth, as we're doing in the moment, with both increasing our investments in the digital area and expanding our physical footprint. So looking ahead, next slide. Next slide. Even though it's a challenging situation short term, with closed clubs in Norway and Denmark and strong restrictions on operation in Sweden and Finland, we are optimistic on the road ahead. We see that we are able to operate clubs now during the pandemic in a good way. We are able to give our members great experiences, and we see that when we have clubs open, we are able to have visits nearly on the same level as last year. But of course, closed clubs are financially challenging in the short term, as shown in our Q4 results. But we remain optimistic, and we also see positive, as I said, market momentum. Hence, we are expanding our offering, both physical and digitally. And we are confident that we will quickly recover both visits and member base when we are back to operations with open clubs and restrictions are starting to be lifted. So this, combined with the underlying megatrend around health and lifestyle, people being more focused on living a healthy and active lifestyle, we are optimistic on the road ahead, even though, of course, as I said, the current situation is challenging for the whole society and for SATS. Thank you. This is what I plan to present, and I do hope that we have an interesting Q&A coming up, and maybe we can keep the Outlook slide up for the Q&A.
Of course. Thank you. So if we start with your digital offering, it's a very interesting initiative, and I believe it's a common strategy for most of the gyms that operates under the current conditions. Could you elaborate a bit on your strategy to set your business aside in the online offering? What do you offer to stand out in that setting?
Sure. I think, as you said, there have been, of course, major steps taken by many players throughout the pandemic on the digital side, which is great. But I think, it's important for us. It was important that our digital offering was quite strong also before the pandemic, and we had quite a strong technology platform. And basically, we are doing the whole, so to say, digital growth is happening on our own platform. So many players have, of course, onboarded, so to say, external apps and external content, etc., to have somewhat just an offer to their members during the pandemic. All our traffic and all the engagement is happening on our own technology platform, meaning that we are having, so to say, the data and insight of this usage and this strong growth with our own content on our own platform. And then going forward, we will continue to expand the offering. So currently we have both, quite a big online a range of online classes. We have had several, so to say, periods with live classes, etc. What we're doing going forward is expanding this and also expanding it into, so to say, being a more complementary digital at-home offering together with the physical fitness clubs. So we expect the strong growth we have seen in users digitally and usage to continue. And then starting, of course, with already 500,000 active app users, that's a good starting point for this growth.
Thank you. Have you noticed any demographical characteristics of the typical online adapter, or is it common over your entire membership segment, so to speak?
Yeah, that's a very interesting question, and I think is also linked to a typical question we often get from investor in terms of the comeback. What are there specific member segments that we see coming back quicker than others? And I think what is interesting is both throughout the pandemic in terms of comeback of members, digital users, and also across countries, the similarities are bigger than you might expect. So what we've seen in terms of the digital usage is it's quite a wide range of members using. So it's not only, so to say, the younger members or a specific generation in a specific or higher usage of members in the capital cities compared to other clusters, etc. It's quite representative both in terms of demographics and geography when it comes to the digital usage. And then, of course, since we haven't pushed yet, and we will do so in the future, but yet we haven't really pushed, so to say, the digital offering to non-members and to potential users outside areas where we have a physical presence. Of course, most of the users are coming from areas where we already have a physical presence. But this we expect to change going forward as we are also rolling out the digital offering more to new non-members to become purely digital users. And that is also the same when it comes to, as I said, the comeback. It's not that, it's only the young people who come back to the gyms when they open. We see that the whole member base is being activated fairly quickly. After the first lockdown, it took 2-3 weeks. But now, after the second lockdown, we see that the whole member base is coming back fairly quickly.
All right, thank you. And could you also provide us with your short outlook? I mean, you spoke a little bit about this recovery, but just give a general view of your best perception, so to speak, of what to expect in terms of the recovery in the different markets.
Yeah, I think, I don't have more insights, of course, than any of you when it comes to the rollout of the vaccines and so to say, the evolvement going forward in the different countries when it comes to the pandemic. So the timeline is, of course, difficult to be specific on. But what we are very confident on, also based on, our previous experience, and also the plans we know we have when it comes to recruitment of new members, and we have proven that we were successful in that during Q3. We expect, as I said, when we open the clubs and when we get back to a more normal situation, rapid recovery. And then, of course, it's a balance, for example, in Stockholm at the moment, where we have open clubs, or in Sweden in general, we have open clubs, but we are still in a situation where even though the sentiment in the population and in the society is maybe somewhat more positive now than a month ago, we are still in the situation where we are operating with stronger restrictions and where the government is clear on the recommendation of people to, still stay less active. But as this is changing and we, so to say, increase our commercial efforts, we will see a rapid recovery in all markets. And now, for example, in the start of the year in Finland, which is the country we are in where I would say it's not normal, absolutely not normal operations, of course, but as normal as possible, given the situation. We already see that, new members are coming to the clubs, combined with still a digital growth.
Thank you. One additional question, you spoke a little bit about adding clubs at strategic places. Would this include acquisitions, or is this adding of clubs mainly a matter of finding new places to open clubs, basically?
No, it's a combination of both. So it's a combination of greenfields and acquisitions, and then when it comes to acquisitions, there is always, given the market consolidation that will and are happening, there are always, there's always a consideration if you do, so to say, an acquisition, or if you just take over the lease contract or the real estate, or if you basically absorb, so to say, the members that becomes available due to a potential bankruptcy from a competitor. You just basically absorb that member base in your current clubs if you have a presence of clubs in the area. So that's a combination. But I think, last year, many people expected in many industries that you would see, so to say, a wave of bankruptcies. And this wave has, at least in most markets and in most industries, not happened yet. And I think especially in Denmark and Norway, where you have pretty decent and strong governmental support packages, combined with the deferral of governmental taxes, etc., to the government, basically smaller companies have not yet been pushed over the cliff because they can survive with the compensation packages and avoiding paying tax, etc. But when the society is reopening again, and basically you get back to normal position and operations where revenues are lower because you lost part of your business, but costs are coming back and you have to pay all these deferred taxes, etc. I think you will see unfortunately, an increased wave of bankruptcy in our industry, but also in other industry. And we are, of course, with our financial position and our growth ambitions, we want to be active in the consolidation of our industry.
That's great. Thank you very much for a very interesting presentation.
Thank you.